Hey, what's up, everybody? Welcome back to another episode of the Liquid Lunch Project. I am Matthew R. Meehan, alongside my partner, the professor, Luigi Rosabianca. What's on tap today, Lu?
Matt, for a bunch of boring consultants, every once in a while, we like to shake things up. So today we want to revisit the role of CFO. The traditional role has been based on accountancy and reconciliations and bookkeeping. You yawning yet? Today, we'll turn that upside down. Today, we're going to be focusing on a CFO's true role, and that is financial modeling, capital raising, and operational improvements, because that is what's really going to move the needle for a small business. To have this discussion with us today, we have Mr. Salvatore Tirabasi. Thank you for joining us, Sal. He is the Managing Director of CFO Pro Analytics. Man, where do we start? We've been looking forward to this conversation. Tell us how you and your firm are turning the CFO model upside down.
So what we've done is basically packaged a high quality CFO service into a service that's digestible and affordable by emerging companies. So companies that are, 3 to 100 million of revenue, and across that scale of revenue, the needs of the businesses change. Obviously, they're in different industries as well, but what we do is we package a service to be a permanent part-time solution for much less than it would cost for them to build out a full team. And the way that we got there was that, I was a growth equity and venture capital investor for 15 years, then became a professional CFO for about 9 years. And through, all those years of experience working very closely with companies that are trying to grow and evolve, and always dealing with the finance point of view in terms of either investing money and trying to make a return on it, or growing a business that's trying to produce more profits for the owners. I came up with a methodology that I felt could be packaged and delivered into a bite-sized chunk of capability that small and medium-sized businesses could really take advantage of.
I love where you're going with this, because we're not belittling the importance of bookkeeping and accountancy and real-time metrics. It's very important for any business to do that, but that doesn't move the needle. So when you work with a client, give us an idea on when you start working with them, when you onboard them, like what are those lighthouse targets that your firm is looking to achieve at that business?
Right. So when we go in to the client, we're going in with 3 key themes that are not what the work is about. It's what the work is going to get them to, right? So the 3 themes that we're going to get them to are single source of truth. We want them to be operating from a common set of information across the whole organization, so there's no crosstalk and misunderstanding about what's the true profitability of this, or what was the growth rate of that. How many salespeople do we actually have that are effectively in the business? All those pieces of information need to get aligned, and everyone agrees on how we look at the business. As you're getting that in place, you start to become due diligence ready, because we're building systems and processes on this information, which due diligence readiness means that at any time, any third party buyer of your business or investor, lender, bank, insurance company can come in and ask questions about your business, and you're giving them very good information. And if you have to do storytelling, because it's, say in the case of an investor, they want to hear, like, why is this business so great? All of that flows from due diligence readiness. And the third thing is that we're always focused on equity value creation. We want the owners of the business, whether they're, VC backed or family owned or founder owned, or, owned by a group of investors, we want them to be seeing more profit in the business, and we're constantly driving decision making to push more profit. So those are the three goals that are common across all customers. And then when we meet with the clients and we onboard them, or we're pitching them, it's a very customized conversation, because a $3 million company is very different from a $100 million company. A consumer based company versus B2B is different, and they also could have different issues that they're facing. And so we customize a package of things that we do for them in order to achieve those three main objectives that I described earlier. And then, by the way, that package of services, we go in as their permanent part-time CFO service. So we're there for the long haul, and we roll with the punches and evolve with their business as well, because new things happen every month, right?
Sure. So I imagine in this journey, you probably deal with a lot of family businesses.
Yes.
Give us some interesting anecdotes on how dealing with a family business may be unique versus a non-family business, because you may have sibling rivalries, you may have father-son complexities, etc.
Yeah. I have a founder-owned business that I work with, where they raised some debt. A fairly sophisticated lender, a private credit fund. They didn't really have a very sophisticated finance function, and the forecasting that they provided to the lender was way off. The lender lost a lot of confidence. In that situation, the two founders were, like CEO and kind of COO. And as a result of the pressure they were getting from the lender wanted them to flip-flop roles, because I guess they felt the operating guy had more financial credibility with them. And in order to keep the lender happy, they ended up flip-flopping roles. And, I wasn't there when that happened, but I could tell just from reading the tea leaves that was a very uncomfortable thing for them to have to go through, because they had been operating as co-founders, but in these,
Sure.
in this mini hierarchy for a long time. And you could imagine that for a third party to come in and then become unhappy with the results of the business and say, hey, you guys need to change roles. Tough thing for people, just, your own professional ego, is going to get in the way of that. But that's one example. Another example is, I've got a client that sells branded consumer goods, all contract manufactured out of China, 15-year family business. I mean, I can't tell you like the kitchen table conversation. I mean, it's like, it's existential. They will go out of business with 154% tariffs, and these are a couple of guys that bootstrapped a business from scratch for 15 years, have amazing branded product, very well respected, sell through all major retailers in the US. And they wake up one day and they're like, I've got to stop shipping containers because I will be hemorrhaging money if I take shipment, because I've already negotiated retail prices on them. That's a new thing. It's happening right now.
That's happening to a lot of people right now.
Oh yeah. There's many, many, many more people than, I think the whole theme of, there's a certain number of manufacturing jobs that we've lost over the years.
Mm-hmm.
It's an interesting theme to think about. But what I don't hear is how many entrepreneurs in the United States have started businesses and actually employ people in the US who are making money on the back of manufacturing in China. That's I think they throw around numbers like 20 million manufacturing jobs were lost. I don't know what the number is of businesses in the US that are selling Chinese product into the US and other economies, but it's not like 1,000 people. I can tell you that. I don't know if it's 20 million, but it's definitely more than people probably think. And they don't really, I don't think that really comes out in the media that there's all these other people being affected. I mean, it does come out in some respects. There was actually something that I saw, Lou, in your neck of the woods on Long Island, where they were interviewing a guy who does Halloween costume retail, talking about how it was affecting him. But anyway, so you asked for a couple of examples of family businesses. Those are things that I've encountered and seen, and those are real issues that you need to kind of grapple with, and we do a lot of work to help them.
With this whole tariff situation, it's just got to wait and see. I feel like, and I know some people are sending shipments that they ordered to bonded warehouses in Mexico and just trying to wait it out to see if they get lowered, to see how long they could hold off for. I think it's a waiting game. Only at this point is what you can really do.
Yeah, that's right. And a lot of the bonded warehouse spaces, like I'm thinking it's like 100% utilized at this point. I don't know that.
I would assume so. Yeah.
So yeah.
So, Sal, one question I've been dying to ask you is, for selfish purposes, Matt and I love debt, right? But we're paying our kids' college through procuring loans for small businesses, right? So it's self-serving statement. What's your position on raising debt versus equity? And please feel free to push back as hard as you can.
Yeah, I think equity is in the realm of venture capital. It's all about equity, right? But to raise venture capital, which is a very large pool of capital, you're either, if you're in the early stages, it's a networking game and having something really innovative that resonates with early stage investors. If you've built a business and you're in the later stages, then it's also a lot of work. Probably looking at some sort of banker that's going to take you out, to market. Those deals are always like more complex and take a lot of time. I think as a family-owned business, founder family-owned business, you could also think of equity as your friends and family round, or if you meet some high net worth individuals, or happen to find some sort of institutional capital. You need to have a really good plan around all of that, and I think CFO services really help with that type of a plan, because there is a lot of storytelling involved and figuring out how do you build this arc to the business where there's a lot of opportunity and return for the equity investors. So I put that in like the more complex bucket. It's harder to do, and you're bringing partners into your business. You're going to increase the complexity of your reporting, and you got to be prepared for that. But it's permanent capital, you know what I mean? So there are a lot of advantages to it. On the debt side, there's so many different products out there in terms of borrowing money. If you need capital right away, there's things like, merchant cash advance that you can look at. In SaaS businesses these days, there's all these online platforms that will lend to you on deferred revenue and on contracted revenue value. I just came across a lender that allows you to extend your payables. You put 20% of the capital up, and if you've got 60-day payment terms, they'll pick up your invoices at day 59 and give you like another 120 days on them.
Oh, wow.
So I, for entrepreneurs and founder-owned businesses, I think that being smart about debt is something that we do a lot of work on. We talk to them about this stuff pretty often. Sometimes we walk into a situation, they've got MCA, it's really expensive. We figure out how to get them something cheaper. Sometimes they've got, like some money that they pulled out on their own home equity loan, and then we figure out how to refinance it. Debt, I think, is generally easier to navigate without an intermediary. You can find more options for it, but the interest expense is going to be in a wide range, and there's going to serve a specific purpose. It's probably never going to be as much money as you want. And then even if it was, the interest rate might be such that you can't even really afford it in terms of like your month-to-month cash flow. But I'm pro looking at debt. I think it's an important thing to understand and weigh the different options that you have. But when we're staring at a situation where permanent capital is needed, right, the debt becomes a little bit more of like a stepping stone to the permanent capital, because there are certain situations where you've got to have like an investor in the business who's there for the long run, and that comes with a whole bunch of other requirements. So I'm not in favor of one or the other. I view it as like it's a balanced decision. You need to analyze what your needs are and figure out what fits best, and then understand what happens over time with that capital and how does it need to change over time.
I think it really depends on what stage of the game that you're in, right? Because sometimes taking more expensive debt is better than bringing in an equity partner that never leaves, right? Because if you wind up executing on your plan and you take they're buying in at a low valuation and you run the company up, well, what's more expensive, that 15, 20% you were paying for the debt, or that 20% of equity that never goes away and the valuation just 10x?
Yeah. Though what I would say to people in that situation is like, you shouldn't, if you raised equity and you're successful, you shouldn't really regret that you gave up ownership, right? Because the capital was needed to get you into a position of being successful. So, it's better to have more of a little bit less of something much bigger than not having ever had the opportunity to even get there,
No,
So
I totally agree with that. That statement. But for the average blue collar business owner out there, right? They really don't have access to high net worth individuals to go
correct,
and get it. So the first thing that we're taught in school is let's go to a bank, right? The bank's going to give us money, and then you go to the bank, and banks really don't like to lend.
Yeah, they do not like to lend.
But it all comes back down to, at the end of the day, if you're looking for debt or equity, your numbers need to be in order, because don't think you can just go to a lender with a great story. Well, maybe in VC land you can and be losing a lot of money and have them fund you, right? But it all comes back to having your numbers and your profit and loss, your balance sheet, and your projections in line in order to get capital.
Yeah, 100%. And you want to also be not just to have the information to make the great first impression, which, by the way, that first impression, I think, is something that you really have to take very seriously, because you can, if you show up and you're more professional than anybody they've seen in like the last year, it's going to make a big difference. And in these, especially when you're dealing with these lenders that are offering specialized products and dealing with a lot of entrepreneurs and founder-owned businesses, if you show up next level, you're going to really, really get their attention. Because I've seen it myself with my own clients, I'll walk into a meeting with a lender and like, we'll have a conversation, we'll show a bunch of material, and they'll be like, wow, I haven't seen anything this good sometimes ever,
I'm so happy you brought that up, because sometimes we'll have businesses come to us and first of all, their financials aren't in order, and you can't submit partial stuff to a bank. They're going to get annoyed. It's going to go It's going to go in the bottom of the file, and chances are you're going to raise red flags and they're going to say you don't have your shit together, right? But that brings us to the importance of a pitch deck and even a lender deck, right? Everybody thinks a pitch deck is when you go in and raise equity, but there's also lender decks.
Yeah, of course.
If you can tell them the story and answer their questions and make them feel comfortable right from the jump, you have a way better chance of getting funded.
Yes. Yeah. I'm always about packaging the information with a presentation as well that can guide them through the whole view of the business. And then you obviously provide a lot of the backup information, in spreadsheets or, legal documents, whatever it is that they want to look at. But packaging the story in the deck, regardless of what investor you're talking to, is a must. So if you want to impress, you need to do that.
Let's talk about that for a second. For everybody listening, what should they be putting in these lender decks and pitch decks?
Yeah, so what I usually do is I have you sort of have like a topical table of contents, but you have like a quick executive summary. Here's what we're trying to do. Here's why we want to do it. Here's why our working with you is going to be really important. Then I like to have a more detailed page after that where I'm basically talking about the key investment highlights. What are the things about this business that are going to be very meaningful to the investor, that are going to help them formulate what's in the investment world is called the investment thesis, right? And it's things like, hey, we've grown revenue by this much, we've maintained margins here, we've established a new customer acquisition channel that has produced XYZ in the last 90 days. We just hired a head of HR to help us grow. These are things that talk about the quality of your performance, but also the professional capabilities that you're building into your company that will make them feel much more, confident about investing in you. In a VC world, that page is really more about your target market. How big is it? How much have you penetrated? How do you distinguish yourself from the competitors? It takes a slightly different flavor, but it's still like setting up the story about why is this such a great investment opportunity. And depending on whether you're going for debt or equity, it's going to take on a slightly different view, but you need it in both instances. And then you're basically using that information as kind of your topical template in a way of things that you want to show in greater detail in the rest of the deck. And then I usually, you want to cover things like competition, the team, the products, the margins of the products, and then finish it off with, financial projections that are going to be historical financials, but also financial projections that are going to be meaningful to them. So, for example, if I was going to a lender, I would want to show them a financial projection that includes, let's say I'm raising $5 million of an asset-backed loan on receivables financing or something like that. I want to show, hey, here's the $5 million, and here's the financial projection with the $5 million in it, and here's how the business is going to grow over time. That gives them a financial view of what your business is going to look like when they're in there, right?
Yeah, no, absolutely. You're showing them where you are now, and then what that capital injection is going to do to the company to show them that they feel safe. I think a lot of people, especially smaller business owners, don't look at it as the bank's actually investing in them when they are. They're just investing through debt and not equity, right? Because their money is at risk. I think people have to think about that and flip that switch in their head. Understand these guys are investing in you, right? They're not just there to give you a loan. I think people just take that for granted every day, business owners. So there's a lot of talk about AI right now. How do you see that working in your industry? And what do you think that does for a small business, and where can they implement it most?
Well, in our business, we use AI and also automation tools an awful lot. It's there. The automation tools, number one, like Zapier and Make, they really help. When I was talking about like single source of truth, due diligence readiness,
Mm-hmm.
those are tools that really help us take rudimentary data systems and connect them without having to go into like some huge IT project. And that's an important part of what we do because we want to have really good flow of information. It doesn't need to be perfect. It just needs to be good enough. And that allows us to do better financial reporting, projections, dashboarding, things that are information that the business owners want to consume on a regular basis. The AI piece for us is something that we use for expediting different types of analytics. And they're more kind of like desktop tools that we might use. Like, for example, I just did a commissions rework for one of my clients. They want to change the commission plan. So instead of like, we took the data into Excel, we organized it, and then we just fed it into Claude, and we said, "Hey, Claude, just take this data, take the 1,000 records of commissions that were paid over time to these individuals, and recalculate their commissions based on the new program. And here's what the new program looks like." And it just took the table of sales by rep for the last 3 months and said, if they were on the new commission plan, this is what they would have gotten paid. And then what we did, then I tell Claude, hey, now organize this into deciles. So get rid of the names, give me the top 10, the next 10, the top 10%, the next 10%, and so on. And let's look at the difference in what they would have gotten paid. I just did all that in AI. Now, if I had done that in Excel, it probably would have taken me like, I don't know, like maybe like 2 to 3 hours to just me or one of my analysts to like organize it. And in Claude, it's like 20 minutes, and then Claude gives me heat maps too. It's like, like show me in a map, like where the top guys are, where the other one, you know what I mean? And it gives you like little, graphics and stuff. And so we use it for that. It speeds up our work. It actually enables us to really deliver a service to clients that's a very high level.
Mm-hmm.
In a way that's affordable to them, because instead of spending I'm an expensive resource. My hourly time is very expensive. If you need me to do something for 3 hours and I can get it done in 15 minutes using AI, and I'm giving you all the answers. And by the way, you need our level of sophistication to tell the AI what to do, right?
Yep.
Also, so it's not like we're not applying our skills. We're just doing it in a much more efficient way. I think for small businesses, the AI tools, I think, are very valuable for if you're not a sophisticated analytical person. It's a good way to like have it explain to you different types of analysis. Like you may think to yourself, like, oh, I've got this thing I'm trying to figure out. You can go to the AI and literally just say to it, hey, this is what I'm trying to figure out. How should I go about it? And it'll kind of give you some coaching, and then it'll keep prompting you to like give it more info to eventually give you maybe what you're looking for. Another place for small business, and I use this in my own business, is it's really helpful for content creation,
Mm-hmm.
proposal generation. I do a lot of blogging, and I like to get good data points and rough outlines from AI for certain topics that we're trying to generate content around. The initial work can get really sped up by doing that. So if you're a small business owner and you are in the business where you need content, presentations on, stuff that you want to post online, it's a tool that facilitates all of that, and it saves you time.
Yeah, we use it over here for that all the time. Definitely content creation. It gets the sparks going, right? And it gives you a great starting point, right? And then also tools like you said, we use it all the time to help us analyze certain documents that clients send us, right? But I got a follow-up question. There is, you keep saying Claude, so you're not a fan of ChatGPT? You just
I use ChatGPT too, but
okay.
I originally started using AI. I wouldn't say originally, but the bulk of when I really started using AI, it started out with a lot of like text-based stuff.
Mm-hmm.
And I found Claude was just a better writer.
Okay.
And so then I just kind of stuck with it. But I will tell you, like, I've had Claude write code for me.
Yeah.
That we've used. Like, I have I have a bunch of examples I can give you, but we had with one of our clients, we had a huge data set that we were analyzing, and I don't know how much Excel you guys use, but Excel and Power BI, which are both Microsoft products for data analysis, they both have behind the scenes this Microsoft product called Power Query, which is like a very friendly way to clean up data, like a user-friendly way to clean up data. It still is sophisticated, but you can watch a few YouTube videos on it if you're good at Excel, and you can learn it pretty quickly. We had this data set that just got too big for Power Query. And so Power Query writes code. Like you sort of like drag and drop and like move things around, and in the background it's writing code, and the code is called M code, right? And you could go into the M code and actually do programming if you want, or you could just use the screen and move things around, right? So what did we the data set got too big. It was annoying to work in Power Query. We literally decided we need to rewrite this in Python. So, and none of my guys were like, they know some Python, but not enough to like, they know how to like, if you give them the code, they can run it or like fix things. One of us literally took screenshots, not even copy and paste, like screenshots of all the M code, module after module. I think it was like 50 modules of M code. Uploaded them to Claude and said, this M code does these things. Can you validate that you understand it? Claude literally is looking at the images and reading the code and coming back and say, this program does these 5 things. And it was totally right.
Wow.
And then we said, okay, now rewrite it all in Python. And it just rewrote it all in Python. We copied, pasted it, they compiled the code, and it ran like I think they made 2 changes to it.
That's awesome. That is awesome.
Well, Sal, Matt, I think there's only one conclusion to that statement. Claude must have been derived in Brooklyn. Sal, I gotta pull back the curtains a little bit. I gotta share with Matt that you're also a Brooklyn boy.
I am. That's right.
And more so,
born and raised.
And we happen to be graduates of the same high school. A couple of years apart. We're both Xaverian Clipper graduates. Maybe we should send this episode of the podcast to the president of Xaverian. Give him
we should. That'll be funny.
I have to ask you, how do you think your humble Brooklyn roots have impacted your business career?
Yeah, you know what? I was kind of bootstrapped from the beginning. I was working from the time I was like 13 years old. And a lot of what I have had to do in my life was self-taught. And, just kind of like building on, your own ability to learn stuff and adapt to situations. Especially also, I think in Brooklyn at the time that you and I were growing up there, there's kids on every street. I don't know. I mean, I grew up on like 63rd Street and 21st Avenue, and it was like there was a bunch of kids that lived on 62nd Street, on 63rd Street, on 64th Street, and you were always navigating all these different social dynamics and situations.
And kids get together, and you got to pick up basketball game, or you're playing wiffle ball or stickball.
Exactly. And so that part of it too, in terms of like just understanding people and being able to understand different types of situations, it really helps a lot in business in general, just being able to relate to people.
Yeah. Sal, I have to do this. My partner gets emotional. Matt, Staten Island was also a cool place to grow up.
That's about me. I got out of there as fast as I could.
Sal, all kidding aside, please tell our audience where they could find you and CFO Pro Analytics if they're looking to engage a superstar CFO team.
Yeah, we the website is cfoproanalytics.com, and you can go there, and there's a lot of cool content and information related to small businesses. We've got some great calculators on there where you can look at asset-backed loan comparisons, lifetime customer value. It just gives founders and business owners practical tools that you can use for stuff that might be affecting you right now. And you can check out our team. We got an amazing team of people. I'm really proud of the people that have come on board to work with me. Super talented, smart, and hardworking group that I've got. So, but yeah, you could find us there, and then I'm on LinkedIn. I'm posting regularly there too. Feel free to send me a message on LinkedIn if you want, or you can just use the contact us button on the website.
Sal, thanks so much for being here. We really appreciate it. One question before I let you run. So is it Napa Red or Bordeaux? That's what I'm reading in the notes. Which one?
Oh, I got to go Napa Red.
Okay.
Oh, he abandoned the Barolo.
I didn't get the choice. He didn't give me the Italian choice.
Sal, thanks so much, everybody. That's a wrap of the Liquid Lunch Project. We'll see you in the next episode.
Thank you, everybody.
Let's go!